Good afternoon. My name is Patrick Hawe. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All trades placed by myself are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Positions disclosure, I ended up taking some Dick's Sporting Goods home today. Closed above 120. It wasn't a great close, but closed above the level. And I was able to sell some higher than that as well. So I took a little bit of that home. And still long pins, which still trades very well. So, what did the markets do today? And let me just add in. Actually, I could just use this chart. I accidentally deleted a chart today. So, what did the markets do today? What's going on in the markets? And what are we looking forward to going forward? So, yesterday, markets got hit pretty hard off some weak economic news. That news actually started on I forgot about it too, but on Tuesday we had it was Empire State Manufacturing Index, which was like a gigantic miss to the downside. And then yesterday we had the retail. So we had I think it was PPI yesterday, which came in light, which is good for the inflation narrative. But we've already been speaking about how not that inflation like doesn't matter anymore, but we're pretty sure inflation's peaked at this point, and now the worry is more about how much damage is going to be done to the economy from this fight with inflation. So there's a big retail. Well, it wasn't too big, but there's a big retail sales miss to the downside as well. Consumer spending slowing down. You had the banks reporting earnings, and pretty much it seemed like all the CEOs were saying the same thing, that they're starting to see consumer spending really slow down. They're starting to see delinquencies go up. Things that we're expecting to see, but you don't want them to get out of control, obviously. That also seemed to align with this trend line that has been holding us down literally all year. And a lot of people thought this was going to be the time that it really broke. But once again, so rejection off the 400 resistance trend line mixed with again, weak economic news, which is something the Fed wants to see, but if it gets too bad, that ruins the soft landing narrative, right? And that's kind of what the market was really starting to price in a way, was the soft landing. So we had a kind of like a big run up into the report, into resistance from CPI before. Markets were due to cool off, but we got hit a bit harder than we should have yesterday. Bulls really wanted to keep 395, futures 39.50. That was lost yesterday. We closed below it. And so today we saw a gap down. So today our game plan was looking for it was kind of like looking for a bounce, but it wasn't really. Today's the day that it definitely needs to happen. At the it's only a day two. Yesterday was a day one down. At the same time, though, 387 to 386. That's a big area that needs to hold. We gapped down to. We were above 390 pre-market, right? Where we trading pre-market. Yeah, we were trending. I remember this actually. We were trending down pre-market all morning. So early in the morning, we were above 390. We started to lose that, trending down, down, down. Oh, that's right. That's right. And then unemployment number comes out at 8:30. Initially, we ticked down off it, but tick back up. That ends up being the low for at least the first couple hours or so. And then we ended up losing that and reclaiming that and closed off of that. But so the game plan coming into today was basically yesterday. It was a little tricky because yesterday was damaging, but at the same time, we were getting close to an area where we really need to, and not only need to, but should hold at least on the first test. And so what's been going on under the surface the past couple days with this rally, with this fade, everything like that, is the VVIX has been giving us or not but a negative divergence signal. So, and we talked about this a lot in the room. We were focusing on this a lot. It was really tricky to trade the market with this because the market kept pushing, but oftentimes these signals are a few days early. So last Friday, the VIX closed just over 18, but the VIX pretty much closed at 18. at the lowest levels in over a year. Literally lowest levels for VIX since last January. At the same time that the VIX closed red on a New Year low, VVIX closed with a green candle, a green doji that's also well off lows. So for like over a week now, the market basically, as SPY broke up over 386 and started to trend higher in what was a legitimate breakout, VVIX was basically like calling bogus to that, right? So as the VIX trended lower, made New Year lows, VVIX was already off lows. It was hanging in. It was coming up. This little doji here, again, was last Friday when the VIX closed at a new low for the year, yet this closed green. And then the past few days, this has been trending up. Excuse me. To the point where, again, even yesterday morning, markets gapped up. Markets were green off the open. They were even, or we didn't quite break yesterday's high, but we held in. We were green. And the VVIX was doing the same thing again yesterday. It gapped up. It was green. So that signal has been giving us a negative divergent or a positive divergent signal for the VVIX, for the VIX, which is negative for the markets. So that is pretty much what has been happening under the hood and what played out over the course of the last day or two. But things change in this market quick, right? So just like that, today we're coming in at lows of the day. We're breaking pre-market lows. And while this is happening, so SPY's low of the day is at 11, let's call it noon today or so, which also did end up breaking pre-market lows. The only indice that didn't break the pre-market low, which was notable, was the Dow, which has been one of the sources of relative strength. IWM has been a source of relative strength as well. That broke the pre-market low, but that daily chart got pretty extended to the upside as well. So SPY made its low today at noon. Now let's take a look at what the VIX was doing at noon today. At noon today, the VIX was grinding higher, pretty much at day highs, grinding higher. It made a higher high, higher low, a higher high. Let's take a look at what the VVIX was doing at noon. At noon today, VVIX was not making new highs. The high that VVIX made happened at 9:45 this morning. So at noon, SPY is at low of the day, VIX is at high of the day, and for the first time in like over a week, we're getting a negative divergence signal from the VVIX. And it was pretty much a wrap from there. That started the process of not necessarily a reversal. Excuse me. Not necessarily a reversal because we didn't close in like the best way ever today. But it capped the downside. So that's your like real-time explanation of the VVIX versus VIX versus S&P signals that we're always looking at and looking for, and works so well. It continues to work so well. So then I remember a little bit after noon, that's when UVIXI gave this like king queen, and we were calling that out as well. Gave this king queen on the 5 minute, so nice green candle followed by a red candle that negates that. That ended up also being a king queen on the 15, same thing. Bull flag, solid green candle, red candle immediately negates that. And that king queen on the 15 was a shooting star on the 30. That was the, further confirmed, like the VVIX gave an early signal, and then that gave another signal, and that further confirmed it. And that pretty much marked the low of the day for the S&P. However, we didn't close like in a fantastic way. We rolled over a little bit into the close. The MOC was like $4 billion to sell, which was pretty sizable. Tomorrow, Friday, is the third Friday of the month, so it's options expiration. Usually some wacky price action tends to happen with that, and then we get a little bit looser after that, for better or for worse. Looser doesn't necessarily mean, good and up, but just a little bit looser. But, so, that's kind of like the recap of why the market's been moving and why it came down so hard the past couple days, and then why we ended up actually holding in okay today despite yesterday looking like an end of the world candle, and then even today at noon it was looking pretty bad. Like, for sure it was looking pretty bad, but the bullish signals came in there. So now what are we looking for going forward? um, it's back to being tricky and in the middle and more neutral here. So again, we're back under 39.50, so the bulls lost their momentum. The bears, their big picture is still intact. The bulls medium picture is still intact because this like 386-ish breakout, we're still holding that. So like, big picture, bears are fully in control still. Medium picture, it's a fight. Small picture, bulls just retook control from the bears, which took back control yesterday. So while today's candle is not a fantastic close and not a great candle, the VVIX, again, now looking at the daily candles that the VVIX gave us versus the VIX, this is a solid red candle. I guess actually we did tail up a little bit into the close there, but still a decent red candle for the VVIX. For the first time in like 6 days, today was going to be like a day 6 up, right? That's the other thing that helps you, or was helping me anyway, not worry too much about like another huge down day, because while it might only be a day 2 for the market, you're looking over here, it's a day 5, day 6 up for this. So that closed with a decent red candle. The VIX closed with a big topping tail, still green, but a green VIX close with a red VVIX close. That's the opposite. That's negative divergence for the VIX, which is positive for the market. That's the opposite of what we were just seeing. So that tells me that the market should at least hold in, and isn't going to just totally fail this breakout right away. At the same time, we didn't close well. The VIX didn't close big red or anything like that. That's not telling me that we're going to shoot right back up to 400 tomorrow. So that's what makes this tricky. We're back kind of in this middle zone where we're probably going to have a bit of a battle between buyers and sellers, and we might have to wait for another more clear / bigger signal from the VIX market for what the next move is going to be. Because right now, what the VIX market has been telling us is this rally is a bit, this rally, I don't want to say it's like fake or like Fugazi, but basically the VIX market was telling us, be careful of this rally, be careful, be careful, be careful. That's what it was saying us. Now the VIX market is saying, okay, that fear is gone. We had some fear come in. Now that fear has been negated a bit. But we're in the middle of this zone, right? So what do we have to look for going forward? Again, Netflix just reported today. The reaction looks mixed. They missed on some of their numbers. They beat on paid subscribers, which is like the most important number people are looking at. Stock's been running and been holding up well, so that upside might be a bit capped, even though the report overall seems like it was what people were looking for. Tomorrow for data we have what do we have? I think it's like a home sales number tomorrow. Friday, December 27th. I believe it's a home sales number tomorrow. And then next week we have a good amount of data as well. There's PMI from multiple countries, including ours. There's data on Wednesday, Thursday. There's data pretty much every day next week. And then we also have Microsoft on Tuesday, Tesla on Wednesday. And then the week after that is like every earnings report in the book, plus the Federal Reserve meeting on Wednesday, February 1st. So it's tricky. The market's in a tricky place. The upside is still really seems to be capped out, but The downside kind of seems to be capped out for now as well, as we wait for more data and more clarity, which that's what keeps, we've been talking about that for months now. That's what this market does. It makes a move, and then it finds a range and consolidates until the next big catalyst makes a move, finds a range and consolidates and chops. That kind of seems to keep happening over and over again. So for now, we're still above 385, 386, this area. So it looks like our range is going to be, I'm guessing, 385 to 395, 386 to 395, something like that. Again, unless the VVIX red candle today gets negated tomorrow or the next day, pretty much immediately negated, I'm thinking this market should hold in this breakout area until the next big catalyst, which at that point, who knows? And we might get new signals from that. But yeah, so that's pretty much everything in terms of market, in terms of what I'm thinking about. There's a lot of weird stuff going on with the rates market and what these Fed members are saying. It's tricky out there. Trying to think if I have anything else to mention. I don't think so, though. And I hope all that explaining of the VIX and kind of what's going on makes sense. Because after today, again, the signal is the downs. We seem to be a bit safe on the downside for now. Like, bulls can breathe a little bit. Like, okay, maybe that was it. But they're also in the penalty box, and we're not just shooting right back up to 400 either. If that makes sense, right? So we'll see kind of where relative strength comes in over the next week or so. We'll see how the more and more of these earnings reports come out. We'll see how they look and how the market reacts to them. And then that first week of February is like the big week. So the market wants to range out till then, that's fine, but we'll definitely move by that week. And yeah, I think that's all I have to talk about. So happy to answer any questions or anything like that you guys are looking at. Derek's posting YouTube questions for me. That's very thoughtful. Let me scroll up in the BTF. Costco announcing a buyback. Netflix Wild West. Yeah, Netflix is crazy. Can be crazy after hours. I remember once in the T3 office in like my first year, some guy sitting next to me traded Netflix after earnings, and I've never seen someone lose $5,000 so fast in my life ever. Scary stuff for sure. Bed Bath & Beyond receives notice regarding delayed quarterly reports. Still $3. This daily chart is building out decently for a bankrupt company. Not a bad daily chart. Hey Pat, what do you think of getting long QQQ at 950 when I had an inside 5 and up? I thought we could test highs from there, but it eventually failed. QQQ at 950. This inside 5 and up, I like it. I assume you should be able to sell some in this rip before it eventually fails there, but inside 5 and up, that inside 5 and up reclaims the low that had originally broken. I guess it doesn't close above that low, but I like it. It failed because it wasn't, there wasn't time quite yet. And I guess in theory too, you didn't have that VVIX signal that I just explained. So that signal wasn't quite there yet. But other than that, I like it. What did the SPY look like at that bar? SPY didn't look as good there. I mean, I guess I could counter argue with you that most of the other indices didn't really have anything special for a bar going there. Although it did pop. Most of them popped after. Yeah, I mean, I like the idea. The execution, you had extension on the 5, so you had room to sell some on the bounce, even if it failed. Yeah, it just failed for you, but I like the idea, definitely. Ideally, you stick with the idea, because again, like when you're playing, if you're buying cues on on this signal and this eventually fails, I would hope that you're buying cues in a like more daily thought process, and you're trying to get execution, you're trying to get better risk execution on the 5 minute. I would hope this isn't just like a random trade where it fails and you walk away, because if you have a thesis that cues are going to bounce at some point today, stick with it and look for the signal. You got a signal, you get your trade, you take some off, that eventually fails. But you're still, you didn't get the trade you want, but your thesis is still intact. It's just there's still some selling going on. So, ideally you stuck with the idea, and obviously eventually if you recognize the signals that did come in, this trade ended up paying a little bit better. But, yeah, like the idea, just a little too early. But again, ideally you were able to sell some in that pop and at least like break even in that trade, or not really get hurt in that. Chi, do you consider not following a game plan a mistake? Yeah, for sure. Absolutely. I would say all, if not nearly all, but I would say probably all of my biggest losses have come from when I don't follow a game plan. So yes, it's probably the biggest mistake you can make. How to identify a mistake if you don't know that you made a mistake? Well, if you don't know that you made a mistake, you probably don't know you're making a mistake against your game plan, because you probably don't have a game plan. So I would say, first of all, make sure you have that full game plan. Like, good scenario, medium scenario, worst case scenario. What is your out? Stick to that out. If you want a looser out, that's fine. Not every out has to be the low of the last 5 minute candle. You can have loose outs. You can have big outs based on daily charts with, multi-point range outs. Because again, if the risk reward is there and you want to risk 5 points, but you're risking 5 points to make 20, 25, 50 points, that risk reward makes sense. So you got to have the game plan in first. If you have an out and you want to trade around a core versus that out, stick to that out if that out ever breaks, stuff like that. But so you got to make the full game plan. Like, what are you doing if it goes up with you right away? What are you doing if it goes against you right away? What are you doing if it goes sideways and takes its time to work out? You got to be picturing all those possibilities in your head. Like when it's the same thing when you're coming in and taking a trade based, taking like a daily trade based on daily levels, and you're going for a bigger kind of like daily reward. When you're buying, you're like coming into this morning, if say we're thinking SPY has like a good bounce today, which we are expecting maybe a bounce, nothing like too special though, but say it's one of those days where we're really like, okay, SPY's day 4, day 5 down, it's pretty extended, we're looking for a bounce. What you're doing is picturing that daily green candle, like you're picturing that green candle there on the chart before it's even there. And it could either be a solid body, it could have a tail at the bottom. There's only so many ways a candle could look. If it's going to have a tail on the bottom, it means it's going to open and it's going to trade down for the first half of the day and then rally up. But like, you're picturing that candle, you're picturing what's going to happen before it happens. That's when you're buying like extreme extension to the downside and something ends up hammering. You're buying before that hammering and even ends up forming. So what I'm trying to say, Chi, on YouTube, is you got to have the full game plan. The full game plan. Not just, just your out or just your reward, just your one reward target, but like the full game plan. And if you don't, then, probably don't take the trade until you do. Because something's gonna happen. If something's gonna happen, some news is gonna come out. Some Fed member is gonna speak, where some volatility is gonna happen, and you're gonna freak out a little bit, or this and that, and you're gonna shake yourself out. And later that afternoon or 2 days from now, you would have made a bunch of money, and there was no reason for you to get out. So that's kind of like my long answer for you there. But make sure you got the full game plan before you're even getting in the trade. What are my thoughts on IWM long at the open and 935 candle? All indices were above the employment numbers. Gap down into support. IWM was strongest, but today it was a bit weak at the open. Yeah, so IWM opens at like a little above 182.50. 182 is a bit of a level here. I could see that. And then, so I never buy something just like off the open just because the time says 9:30. Like, at the minimum, I'm gonna wait 30 seconds, and if there's momentum buying in the first 30 seconds, then like okay, and like I would consider that buying off the open. But I would never, not say never, but I wouldn't. If you're buying off the open, you have nothing to go versus unless you're playing a level from a different day. So buying IWM off the open in the mid 182s, if you're saying I'm buying IWM off the open versus this candle's low, which is basically 182, then fair. That's a trade. And I don't hate that idea. I'm not sure if you're saying that's what you did, though. So hopefully, if you didn't do that, then, think about that, right? Like, if you're buying off the open, what's your out? Like, you have nothing to measure against. Again, for me, if I'm quote-unquote buying off the open, I'm at least waiting, a couple seconds to see if, like, some momentum buying comes in or something like that. So off the open, I question, ask yourself, what was your out? Did you have a game plan for that? So then 935 candle, you get a hammer. IWM breaks the low, comes back up, makes a hammer, and you want to go long off that candle. That's a trade as well. I don't hate that idea, and it just ends up failing right away. And that's similar. I would say that's similar to. Yeah, I would say that's similar to Sebastian's trade, where honestly I don't hate that trade, and it just ended up failing. If you're saying, and if you're using the reasons that I'm telling you, right, like don't just randomly buy it because it's 935, but you're seeing, okay, IWM broke the low, it snapped back up, it just made a hammer, SPY looks okay, Qs look okay at this moment. I'm buying versus the low of the day, it tails, goes up a little and then fails. I like that trade. I think that's a good trade, a good idea. And it was just a little too early. And again, if you stuck with, but if you're doing that because you think IWM is going to give a decent bounce today, you don't need to just shy away from that. Stick with it and watch for more signals, which it looks like the next real okay signal was in this down extension here, and then the VIX signal happened on this higher low. That's another signal in and of itself, actually, now that I speak out loud, that I don't think I even saw today. I'm sure one of you guys in the room pointed it out, though, that when SPY made its low at noon, IWM was making a higher low. That was another signal for that low of the day today. So yeah, off the open sheet, just make sure you got an out. 935, also make sure you have an out. I like the 935 trade. It just, failed. Trades fail. Which sucks, but it happens. Yeah, I saw that, Josh, on the Netflix implied move. Jamie Dimon had a good year, I guess. Better than me. If we get back in that 374, yeah, that would suck. GQ Honestly, yeah, I don't know. I don't see us getting back in there for now with what the VVIX just did today with the red candle we just got there. I don't see us diving towards 380 tomorrow or anything like that. Um, it would almost be so concerning to get back in here that we might just, I don't know. We'll talk about that if that happens. But for now we're above it, so we're good. Hey Pat, how concerned are you about 15-minute extension at the open? Is this something you don't really worry about given high volume volatility, or do you treat it the same as you would midday? Also, when volume picks up around 2 to 3, should 15-minute extension be less worrisome in longs given the higher volume? 15-minute extension always matters and is always important. It also matters the degree to extension on the other time frames while it's extended on the 15. So if it's extended on the 15, it probably is on the 5, but is it also on the 30? Is it also on the daily? Ask yourself that. But I am, even 5 minute extension, I'm concerned off the open too. I usually, yeah, I'm concerned with that too. Let me just reread the second part of your question. Also, when volume picks up around 2 to 3. No, I don't think later in the day matters as much. So let me look at like a 15-minute chart. I want to see if I can just see an example real quick where like something. Yeah, I don't really see anything. Yeah, I don't know if that answers your question, DJ. I mean, time of day, extension matters like no matter what time because extension always corrects eventually. But what matters is the multiple time frame. Are they aligned or are they not aligned? Like I think that's what really matters. Um, so there's definitely going to be times where you have extension on every time frame, and there's definitely going to be times where you have 15-minute extension but not so much 30-minute extension. And there's also going to be times where you don't have 15-minute extension but you still do have 30-minute and or daily extension as well. We see that with I think we saw that with the market today. Actually, I bet we did. Um, yeah, so like SPY today as an example, we see this all the time, and I talk about this all the time. With again, this is a great example. You got to have all your time frames lined up. So like SPY at noon today at the bottom, SPY bear flagged on the 15, leg down, bear flagged on the 15 again, and then it broke that 15-minute bear flag down at 11:30. So it was still a little extended on the 15. You could argue, okay, at this point, 11:15, 11:30, you're not extended on the 15 anymore because this 80 has come down to this bull or this bear flag high, right? So you're not extended on the 15, but you still are extended on the 30 at that time, and that helps you have conviction to stay the other way and say this 15-minute bear flag is going to fail because we're still extended on the 30. So I hope that helps, DJ. It's not so much time of day for, I don't think, really, as much as it's, again, what is it on the other time frames? Does it all match up, or is there mixed signals / mixed pictures? Sometimes you feel the continuation flag pattern works more with end of day volume. So I bet what's happening, I bet what's happening when you're saying like 10:30 versus end of the day is something is, I feel like we have an example of this lately. That's when, I can't think of an example off the top of my head that's happened recently, but that's when something like gaps up or trades through a level, is strong, has a 5-minute bull flag, breaks the bull flag higher, has another 5-minute bull flag, and that second 5-minute bull flag, while it's not extended on the 5, is extended on the 15, and that's when you see like a 5-minute bull flag fail, and then you end up coming back down, and then everyone's worried about the market on the 5-minute, but then on the 15-minute, it's really just ended up being a 15-minute bull flag, and then later on in the day, it ends up eventually going because those bigger time frames catch up. So I think what's happening, what you're just saying, is the bigger time frames aren't catching up for continuation. So like you're saying 10:30 doesn't work as well as the end of the day, probably because 10:30, 11, your 5 or your 15 might look good, but your 15 or 30 still might be extended, whereas by the afternoon, that 30-minute, even that 30-minute, that hour ADMA is caught up, and you're not really extended on anything by that point anymore. So yeah, I hope that makes sense. Yeah. I was seeing if I could find a quick example, but I couldn't. Jack, you got stopped out at Roblox at 9:31, then at 9:41, you used the opening, and then the 5-minute low is your stop. Both stopped you out. What should I have used instead for each trade? Okay, so I'm talking a lot about how this market obviously has been very tricky, and it's required you, and not you, I mean just everyone, I think, to trade, either be looser with less size, or if you are trying to take size, you can stay tight but be risking small enough where you can try it multiple times. I'm saying that because I have a feeling something like that's going to happen with this Roblox. So you tried it at 9:31, then at 9:41, use the opening 5-minute low, both stopped you out. I assume that 9:35 one stopped you out at 9:45. So risk into 32. Where was it? So I think what you could have done in hindsight's 2020, as we all know. I think you could have done two things. You could have either been tight, which it sounds like that's what you were trying to do, and recognized this tail of, okay, it broke the low but tailed back up and closed above that low, which is important. Closes and openings of candles do matter, just like highs and lows do. They do matter. So that is, I think, significant that, it's not super significant, but that it tailed up, closed up above that low, then made an inside 5 and up. I think you could have tried this a third time here, and obviously in hindsight that would have somewhat worked out for you. It's not easy to do. Personally, I prefer to give things more room, and I prefer to give things more room than try it multiple times. I struggle more with trying emotionally. I have an easier time holding like red P&L than getting stopped out, trying again, getting stopped out, and trying again. But everyone's different, right? Like everyone's emotions are different. Depends on what you're like as a trader. So I think you could have recognized that and retried it, seeing that, okay, it stopped, because again, the other thing, I explained this in an afternoon meeting recently too, with stops and why you want to make sure that you have a good stop and a good out, is because think about it, when you're using a stop, you are stopping out because the stock is going to move lower below that level, and you don't want to be long if the stock breaks that level, because it's going to go lower below that level, right? Like that's the simple black and white reason of why you stop out at levels. Otherwise, if it's not going to go lower below that level, then why would you stop out there, right? So if Roblox is going to break the low of the day-to-day and stop you out, you're thinking that Roblox is going to go lower, which makes sense. Roblox breaks the low of the day, tails right back up, closes above that low, and then gives you an inside 5 and up. So you could think that this is like a little bit of a shakeout. I think you could have retried it there. If you don't want to do that and you don't want to retry it, then I think you could have looked at 32 as a level here on the daily chart, and you could have traded around some versus 32. And that would be the other side of it, which is maybe starting with a little bit less size, but giving it more room, giving it the real proper room, and that would have sort of worked out too. So I think that's what you could have done with Roblox Jack. I hope both of those explanations make sense. It's tough that it shook you out there at the low. That's been happening to me like almost every day these days with trades here and there. So, it's annoying, but learn from it. It's annoying, but like you wanted to go long Roblox and the trade ended up working. Like that's better than just you're buying the top of the day and everything. Like your idea is working. You just gotta build out your tradings in a way where you can really capture it, not get shaken out. And it's really hard in this market. It's not easy. But yeah, that's what you gotta do. You either gotta give things a lot of room and be a little bit loose, or you gotta be willing to try things, not twice, but sometimes like 3-4 times or so. But if the risk reward makes sense, then it should be worth it. It's gonna be worth it. High volume, hey Pat, what do those individual numbers indicate above the candles on your VIX and VVIX chart? Numbers are DeMark indicators or TD sequential. You can just Google search DeMark, DEMARK. It's basically a continuation countdown indicator. We use it more for exhaustion than extension. I talk about that sometimes, extension versus exhaustion. Extension is when something goes up or down too much too fast, versus exhaustion is more something goes up or down, I don't know, too long, too much in a row, right? So like Roblox up here was extended, but it was only a day one up, but that's extended, versus Roblox over here is kind of extended, but it's a day 1, 2, 3, 4, 5, 6, 7, whatever, 8 up. That's a bit exhausted to the upside at this point. And even though it did end up making one more high, this move was a bit exhausted to the upside. But yeah, just feel free to Google search DeMark indicator, and that's what those numbers are. Costco, yeah, stock buyback, that's good. Is that kind of like what DOS said about your stop being somewhere that the market cares about? Yes. Yeah. The market, I think you said that right. I know what you're trying to say, Mike, and I agree with what you're trying to say. And again, the way I think about it, like all the time, it makes sense, right? Like you have a stop, you want to have the right stop, and your stop is at a place where if you're long, it's on the downside. If you're short, it's on the upside. No, I know what you mean though. You said it right. I know what you mean. If you're stopping out of something when you're long because below that, it shouldn't break that level, and if it breaks that level, it's probably going to go lower, to the point where, again, I could argue that in theory, in a perfect theoretical world, every time you stop out of something, you should also flip on the position, if it's the right out. If it's not the right out, then, I mean, that's a different issue. It's not the right out. But yeah, and like, again, I would never ever do that, flip every time I get stopped out of something, but like in theory, that's what you should do. So if you're getting shaken out of things and your ideas are working, it means you don't have the right out. Like, it does, and it happens to me all the time. But so like Roblox, for example, this daily chart 32 is this level for sure. It was an inflection point all throughout here, came up to 32, gapped up over 32, comes down, holds 32, comes down, holds 32. Doesn't even test 32 this day, but multiple tests. I mean, you can just see it on the chart. 32 is the level here. So coming in, the big institution or the guy who's sweeping $100,000 worth of Roblox calls doesn't care about an extra 5 cents or 10 cents or like whatever on like the intraday morning volatility. It can matter for you if you're trading, big share size, and 5 cents versus 50 cents is a lot if you're trading thousands of shares. So, you got to have your proper out in place. So if you're taking big size, you got to be tight and be willing to try a couple times. But otherwise, again, like at 9:45, this looks bad when it's breaking the low of the day, but the daily wise, this is still intact. 32 is the level. You got your 2180 or 21 EMA a little bit below 32, but that's pretty much supporting 32 as well. 30 is the next level below 32, so you don't want to give it that much room, but I mean, it was trading in the 32s today, right? The upper 32s. So you're risking less than, if you're trading in the upper 32s, you're risking less than $1 to potentially make multiple points, right? I mean, it's Roblox. It's a crazy name. Risking less than $1 for this to maybe move back to 36, and eventually this chart builds out, so on and so forth. So yeah, it's very, especially in this market, it's so hard to get that trade that you risk 5 to 10 cents and you get that daily swing. Like, it's so hard. They shake out so much these days, that you usually, I've really found, and I'm trying to do it more in my own trading now. You got to give things like that more. You got to give it the daily chart room for the daily chart reward. That doesn't mean like huge, just random risk or anything like that. But Roblox 32, for an example, versus, if you're stressing about the low of the day, intraday today, whereas like the real level that matters is 32. That intraday low, as much as it does matter, big picture, as long as it's above 32, it's okay, right? So yeah. Looks like I got through the questions. It's 5 o'clock already. I'm always like unsure of what I'm even gonna say when I do these, and then somehow I just like talk for an hour straight. I don't even know how that happens. Anything else, or looks like you guys are all set. So where's Netflix? Netflix is up still. So that's good for the market. Netflix doing well, I guess. It's not, I mean, it's a little bit independent, but overall, I guess the, quick summary, VVIX has been giving us the negative divergence. That signal came in, or that signal played out yesterday really in a big way. Now we have a red candle there today telling me that unless, and again, the warnings, whatever, they can get negated right away. So if VVIX gaps over today's high tomorrow, or opens and rips higher tomorrow and negates today's candle tomorrow, then this is done and we might go back in the range. But for now, this is telling me that that fear that was building is gone a bit. Looks like the market should try to hold over this range that we had broken out from. But we're also broken as well, so it's going to be stuck and kind of choppy for a little bit, which is unfortunate. But again, we'll see what kind of relative strength. There's always relative strength to find, or relative weakness to find, but there's always outliers to find, I guess. So we'll be on the lookout for them. And Microsoft and Tesla next week, a bunch of data next week, and then a gigantic week following that. So the market's going to keep moving. Things are going to stay busy. So get some rest tonight, and I'll see you guys tomorrow morning.